This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. European Union diplomats failed to approve on Wednesday new sanctions against Russia proposed by the European Commission, as technical issues needed to be addressed, including on whether a ban on coal would affect existing contracts, sources said. On Tuesday, the EU executive proposed to ban the import of all types of coal from Russia, as part of a wider package of measures that would further restrict trade with Moscow. Sanctions need to be approved by EU governments, but concerns were raised in a meeting of EU envoys on Wednesday, three sources familiar with the talks told Reuters.
Oil futures edged lower on Wednesday following a surprising rise in U.S. crude stocks and after news that large consuming nations would also release oil from reserves in conjunction with the United States to counter supply worries. Member states of the International Energy Agency, IEA, will release 120 million barrels from strategic reserves, including 60 million from the United States, according to two sources familiar with the matter. That U.S. 60 million commitment is part of Washington's plans to release 1 million barrels a day for the next 6 months for a rough total of 180 million barrels. Brent crude futures were down 28 cents, or 0.3%, to $106.34 as of 11:06 a.m. Eastern Standard Time. U.S. crude fell 30 cents to $101.65 a barrel.
Moving on to the top news in the energy sector.
China's state refiners are honoring existing Russian oil contracts but avoiding new ones despite steep discounts, heeding Beijing's call for caution as Western sanctions mount against Russia over its invasion of Ukraine, 6 people told Reuters. State-run Sinopec, Asia's largest refiner, CNOOC, PetroChina and Sinochem have stayed on the sidelines in trading fresh Russian cargoes for May loadings, said the people, who all have knowledge of the matter but spoke on condition of anonymity given the sensitivity of the subject. Chinese state-owned firms do not wish to be seen as openly supporting Moscow by buying extra volumes of oil, said two of the people, after Washington banned Russian oil last month and the Europea and Gazprom Neft.
U.S. crude oil in the Strategic Petroleum Reserve, SPR, fell 3.7 million barrels last week to 564.6 million barrels, its lowest since April 2002, the U.S. Energy Information Administration, EIA, said on Wednesday. The EIA also said there were no crude imports from Russia last week for the first time since the week ended February 25. The United States banned Russian oil following Moscow's invasion of the Ukraine on February 24, but allowed vessels already en route to continue to come.
Next, we have the top news in metal markets.
Britain launched a review of steel tariff quotas for imports from Russia and Belarus on Wednesday to address the risk of a shortage of steel into the UK as a result of sanctions against the two countries over the invasion of Ukraine. Reallocating quotas should help keep steel prices down for construction and other domestic industries, Trade Remedies Authority head Oliver Griffiths said in a statement.
Benchmark iron ore futures in China jumped 4% on Wednesday, hitting their highest level in more than 8 months, as trading resumed after the Tomb Sweeping Festival holidays. The most active iron ore futures on the Dalian Commodity Exchange, for September delivery, rose as much as 4.1% to 945 yuan, $148.49 per ton, as demand at steel producers recovered from pandemic disruptions. They ended up 2.2% at 927 yuan a ton. Spot prices of iron ore with 62% iron content for delivery to China, compiled by Steel Home Consultancy, stood at $159.50 a ton on April 2. We will now look at the top news in the agricultural sector. Global dairy prices are coming off record highs as demand from China has fallen away, hit by a new wave of COVID-19 and lockdowns in several cities, including the financial capital of Shanghai. Supplies of milk worldwide have tightened after a combination of dry weather in New Zealand, rains in Australia and war in Ukraine pushed up feed costs for producers, particularly in Europe and the United States. The global dairy trade price index fell 1% overnight, adding to a drop of 0.9% in the prior auction in mid-March. The index had hit a record high in the March 1st auction.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.